Dhiraj Agarwal joins in. He is MD of Ambit Investment Managers, speaking to us on, our theme of financial freedom and how do you build that. Dhiraj, very, very happy to have you on. Wish you a happy Independence Day in advance as we're celebrating it today on NDTV Profit. Markets will be shut tomorrow. And I want to start with this question. We've been asking everyone since this morning. What does freedom mean to you?
What is, sorry?
What does freedom mean to you?
What freedom means for me is where I can do anything which I want, obviously within the realms of the law, without actually worrying whether somebody is watching or whether somebody will stop me from doing what I want to do. I mean, obviously not, I didn't mean breaking the law. Looks like I've lost connection.
Oh, no, Dhiraj, we can hear you. And yes, we appreciate the fact that you mentioned that without breaking the law. But yeah, please finish your point.
Yeah. So, I mean, that's what freedom is, right? I mean, whether it's financial freedom, whether it's freedom in real life, whether it is freedom in the relationships, I mean, everything. Even within a relationship, what real freedom is, you can do what you want without fear of being judged at all points of time. Obviously, so long as you're faithful, you're moral, and you're dedicated. So that's what freedom means to me.
Yeah. Okay. Dhiraj, you reckon Indian markets will get freedom from all the geopolitical noise around us, or for now, that independence is some time away?
I'll break this into two parts, Neeraj. I mean, one is obviously what's happening globally is impacting us, but I think we should also not take our eyes off on what is happening locally or domestically. So even before the current trade wars and the tariffs, etc., started, our economy has been showing signs of slowing down. Our earnings growth has been showing signs of slipping last 3 or 4 quarters. And that is purely domestic, right? I mean, for a variety of reasons, whether consumption is not picking up, job creation has not happened, capex growth is slowing down. That also needs to be addressed. So there are things within your control, there are things which are outside your control. I mean, we can't really control what the US government does. We can just negotiate, put our best foot forward and try to get the best possible deal out of this whole uncertain structure. But I think a lot needs to be done domestically as well to revive the domestic economy. So those are the twin challenges at this point of time.
Dhiraj, when you look at Q1, what are you seeing in terms of the Indian economy and how corporate India is doing? Because the mixed signals there. Some of the data looks good. People are talking about a revival in consumption, etc. But then also stress in certain segments beginning to show?
Actually, the data is not mixed. The data is a downbeat. I mean, okay. we want to see them as mixed, but it's actually downbeat. So Nifty earnings growth for this quarter is just 2.5%. Broad market earnings growth for this quarter is 6% or 6.5%. This is at a 3-year low, both the matrices, right? So we are seeing a lot of commentary where people are talking about a possible consumption revival, possible demand revival, but it's not showing up on numbers yet. So I will color this with a little bit of a positive pinch of salt, that there is a rising expectation and perhaps good reasons to back it, that demand could see revival starting this quarter, right? So there has been tax cuts. Benefit of that is now coming into the hands of the consumer. There has been interest rate cut. It is now slowly filtering down to lower borrowing costs for the borrowers. And a little bit of channel checks that we do is showing some signs of some demand buildup into this festival season. But I think it needs to be very closely watched. As of right now, looking at the last quarter numbers, the numbers are very weak.
The numbers are very weak, but is there an upside you see, Dhiraj? I'm just thinking for the rest of the financial year, if someone wants to, build up at a time of market lows, what do they look at?
So I think, this is what I think we discussed last time when I came on your channel, that the next 2 or 3 years is likely to be a period of very, very high polarization. Earnings, so that the two kinds of phases markets go through. One is where earnings growth is they're in abundance, and second, when it's there in scarcity. I think we have entered a phase where earnings growth will be scarce. So a very small percentage of companies will actually be able to deliver above sector, above market earnings numbers. So it's time more for bottom-up stock picking rather than taking a broad brush market calls or broad brush sector calls. Within each sector, it's possible to find companies which are outshining the peers as well as the overall market. So I don't see this trend changing for the next 2 or 3 years. It's going to be a tough market. It's going to be a completely stock pickers market. And I think the narrative-based or headline-based market time period is perhaps over.
Got it. Okay. Dhiraj, so do you, okay, let's not try and do that Himalayan pink salt garnish to make it look good. Let's assume you calling it what it is. Would you reckon, therefore, that the markets could stay subdued with a significant downward bias in the near term unless what geopolitics improves or earnings improve, either of the two improve and show visible signs?
So I will answer your more concrete question first. Is easier to answer. Do I see a meaningful downward bias in the near term? The answer is no.
No. Okay.
The reason for that is for now, market has digested all negative news, right? So see, markets always in the near term, markets always tend to react a little bit to what is in the price. Can it become worse or can it become better? So what's in the price is very clear. 50% tariff on us is in the price at 2.5% EPS growth in the March quarter when Nifty is already in the price. The result season is almost getting over. So everybody knows the number. What is perhaps not in the price and where we could see some positive surprise in the next few months, if the festival demand is even slightly better than what the numbers have been showing in the last 2 quarters. And this 50% tariff imposition comes down. I mean, I think it will. I think everybody knows 50 is too high and unsustainable. How much will it come down? You don't know. But at the margin, that news is also likely to improve. So near term, too much of downside, I don't see. Possible rally can happen if both these things play out. I worry a little bit more from a medium term point of view. What happens in 2026 and 2027? There are 2 or 3 things which are very, very clear. Whatever is happening to global trade right now has only one implication, that from a longer term point of view, global trade will slow down, export growth will slow down, it will have an impact on the global economy. And that will impact domestic economy as well. So that's in the backdrop. And in the interim, if the domestic cycle does not see a strong revival, I think 26 could be tough.
26 could be tough. Okay. On that somber note, thank you so much for speaking with us, Dhiraj Agarwal. They're joining as a big market voice.